Good morning, traders. It's Merritt with Apteros Trading. November 8th, we're looking at crude oil here. We'll talk about today in just a moment, but before we do that, let's look at what happened on Friday relative to the prep here that we had laid out for you. So some bearishness had come into crude oil. We'd seen a huge run the day before on Thursday. But what did we talk about? We talked about that cycle that we're always ebb through, and that this could be a quieter session, could be less opportunity. But here's what we had for you. So really, there was only one trade, and even it wasn't fantastic, just because of the way that these, if you see these 3-4 bars here, all put in the same high. I don't like to trade against bars that do that. I like to see some kind of a wick usually, or at least a reversal outside the range of multiple bars. So, but this was a trade, right? It's just into the bear zone. It is taking out some of these prior multiple touch highs that we had previously, which is an indication that the auction to the upside isn't complete. All these bars being at the same level, indication that the auction isn't complete to the upside as well. So, anyways, it's an upper extreme intraday. There's the short. You get scaled into here, obviously, for students. Everything's still fine here, and then it's not, right? So this is just because it's into the bear zone here doesn't mean that we sit there and hold through this trade and this volume and this delta that's coming in. The trade's done there. So that's a contextual shift, and that's why we see such a violent type move through there. We go to more of a bullish condition once that's done. Now, bigger picture was still bearish from up here, things like that, sure, but there's a long ways to go. $3.50 or at least $3 from here to here. So now, what about for the rest of the session? Well, I hope some of you caught a little bit of the long after we had that contextual shift. But for me, there was no trade. There was no pullback that was deep enough to get me in, and there was not enough energy being sustained and shown on the tape through this period to get me in on any shallow pullbacks. So for me, there was just nothing to do once that happened. But for you guys, you definitely want to lean on the bullish shift, so scalp long mode, and then using these neutral references. So that's what I thought of Friday. Let's go talk about today. I'll pause the video and we'll resume. Okay, so here we are at the hard right edge. We got about 22 minutes until the pit session open in crude. What do we think? Well, we still kind of think, in a continuation pattern or fashion from what happened Friday, which is the bears that failed to do something, and we're now working higher. So for me, where this market is most clearly trying to get to is 83.50, and that's a bearish inflection, something that we can monitor what happens up there and potentially look for short opportunity. If we are able to, as usual, get above there, well, then that's bullish opportunity to the upside, and we're kind of back up to, I'm doing air quotes here, all-time highs, let's say, if we pretend this is the S&P and we only look at, recent years of trade. What if we get to here, obviously I think the main hypo here is that we do find a short from up here. I think that would be a very nice trade. So we'll see how it sets up, what the order flow looks like, what the price action looks like once we get there, if we get there. If we get short up there, well, the destination is back down to here. Another scenario, if we don't trade higher and get there, is that we start working below some of these neutral levels. You could scalp short. Again, my main idea is that we're working higher currently to find sellers at 83.50. So for me, if I'm taking shorts going lower, that is more of a scalp. That's not like a core position I want to hold forever or swing or anything like that. I'm just kind of going with what's on the table because there's availability and access to it, in the landscape of my risk reward being skewed the other way, right? That's so I call it a scalp. But let's say we wick 82, or let's say we start to get below 81.30, right? Those are I could go short there, no problem. We could go short there, either target the next one or target this bull zone to then perhaps get a second chance opportunity on getting long that we didn't get a great opportunity to do on Friday. It's the same trade, right? So down into here would be a nice spot to be long. And then we might go get 83.50. So those are the scenarios for me. Obviously, if we break this level down, we're very bearish and would look towards lower targets such as 78.40 and 78. All right, that's the full gamut for you. Let's go have a great week.